Hi, this is Victoria. I am back with another great episode of The Chemical Show. And this one's kind of special because it is a two-part series, which is not something we do often. I am speaking today and next week with Rob Vandermeij, who is a partner at Capricorn Partners, which is a venture capital and investment management firm focused in on clean tech, chemicals, and other investments. Rob is a wealth of information, and we had such an amazing conversation about the role of venture capital, how Capricorn and other VC companies investing in early stage startups really make a difference in chemical companies, in the role of clean technology, and in accelerating this innovation. You're going to hear about it this week and next week, and I hope that you listen to both episodes. What we're going to be talking about today, though, is sustainable investing practices, the critical role of company leadership, and how Capricorn Partners helps to navigate the landscape of venture capital investing in clean tech and the chemical sectors. You don't want to miss this. This is like a learning laboratory for anyone that's interested in understanding how do we really bring innovations to market and how do venture capital companies help in driving this innovation and driving us to a cleaner, greener, more sustainable future. Listen in. I think you're going to enjoy it. Hi, this is Victoria Meyer. Welcome back to the Chemical Show, where chemicals means business. Today, I am speaking with Rob Vandermeij, who is a partner at Capricorn Partners, which is a venture capital and investment management firm focused on innovative companies that help people and planet. So clean tech and green chemicals and other things. Rob's a chemical engineer and has spent the majority of his career in chemicals at big companies, including AkzoNobel and Shell Chemicals. In fact, I met Rob at Shell, and we might get into that part of the story. And then he has since been CEO of a number of startups before he started and joined Capricorn Partners. So we're going to be talking about the role of innovation, how venture capital plays into it, and a little bit about clean technology. So, Rob, welcome to the Chemical Show.
Thanks, Victoria.
Happy to have you here. So let's just jump right in. You have worked at some of the world's biggest companies, and now you focus on startups with innovative technologies and really, frankly, quite small companies. So, first of all, how'd you get interested in chemicals in the first place? And then, secondly, how did you make this shift from big to small?
Okay, a lot of questions in one go. I get interested in chemicals because my brother studied chemical engineering. And when I went to look at universities on what to do, I found the part in chemicals where it creates stuff. You take
Yeah.
molecule A and B and you make C. And that was kind of like a magical box.
Yeah.
And still, when I think about my graduation work, my thesis there on the role of zeolites in methanol to olefins, that's almost 40 years ago, but it's still actual. So the code has not been cracked. But it was kind of magical to see methanol going into your pilot plant and then smell gasoline coming out.
Mm,
Obviously we had a leak, but okay. Yeah. But so that's how I got interested. That in the chemical business, in the chemical industry, you create stuff, and that got me going. And then yeah, I worked at AkzoNobel in catalyst and technology business, and then in Shell Chemicals, first in catalyst, and then later on in the surfactants business where we both worked.
yeah.
And yeah, the chemicals industry, it's a cash machine on the one hand, because it runs very large facilities with an immensely important role in the world. At the
Yeah.
same time, it has this questionable image, you know, um,
Right.
partly partly probably deserved and probably also partly very undeserved. But then I switched to being an entrepreneur.
Yeah.
Basically, in Shell Chemicals, there was this. You kind of saw a little bit, plant-based stuff coming,
Right.
And in our own business in the surfactants, Shell had the ethylene-based surfactants, and you saw the palm oil-based surfactants coming in. That intrigued me. Then biofuels got there, and Shell clearly did not have a strategic interest at that time to go
Right.
that way. And an acquaintance of me from AkzoNobel had developed some patents and started a small company. And then I decided, you know what, I can. Shell is a freight train, and you can only influence a little bit. But in a small company, you can have a lot of influence.
Right.
So then I decided, okay, you know, you don't get that many chances in your life to do something completely different in a field where you think you can be comfortable. So that's when I jumped to the small corporate world, and I learned the hard way how American venture capital works. Where you know, in my first investment as a founder, as a CEO, I was also the first one to get fired.
Wow.
Partly because I was stubborn, partly I think the venture capital world at that time grossly overestimated its capacity to be in the energy world. You know, this is 2008, 2009, and venture capital from Silicon Valley had the idea that they could change how the energy world works. Or
Right.
you know, but yeah, it's a very different world. And it's fascinating in small companies to see what you can do by yourself. You know, and the impact you have on that. At the same time, it's usually frustrating because you know one thing you see when you work in a company like Shell is the incredible power of the machine that you have there. You know,
Right.
and also the quality of the people and systems. You know, people complain a lot about working in corporate, it's bureaucratic, blah blah blah. But in reality, you know, Shell's is a continuous asset management machine. You know, if you remember the plant managers we've had at the time, and you know, at Stenlo and Geismar, and how every year on year, they improved performance continuously. You know, I thought that's an amazing skill.
It is.
And then the supply chain complexity that a company can handle. But then when you come to the startup world, you know, where people have very little experience, and then how they grossly underestimate supply chain or
Yeah.
manufacturing complexity or construction complexity. You know, and that's where if you have kind of the mix of experiences I have, it actually, you know, is a good place because I'm not a specialist in anything, but I know enough of it all that I can be of use. Let's put it that
Yeah,
way.
absolutely. Well, and I think that's an interesting point. I think the people do underestimate the value that the processes and the systems and the brands have when you're at major corporations across the industry, Shell, Dow, Axo, et cetera. And then you move to a startup which is nimble and fast, but
Mhm.
probably makes a whole lot of mistakes and doesn't know. A lot of times you don't know what you're doing and how you're doing it. So quite a contrast between the two.
Definitely.
Yeah. So let's talk a little bit about Capricorn Partners, just in terms of who you guys are and what you do.
Yeah. So we're what we call an alternative. We operate under a license of the Alternative Investment Fund Management regulatory. So we are what you call a regulated fund, which means we are under guidance of the European financial authorities. So we have quite some good compliance procedures, risk management, etc. And we manage both listed equity funds that invest in cleantech, and
Got
we
it.
manage venture capital funds that invest in cleantech, in digital and health type startups. So we have different funds. We are a player that plays in the more specialized ranges.
Yeah.
Typically the Series A type financing, which means you know there is a market, there is a prototype, the company has eyes on how to get there. You know, this is the phase where companies are between say 5 and 15 people, and that's when we start to invest. So you're beyond science.
Right.
but you're not in the market and you haven't scaled technology yet.
Yeah.
That's the
That's
point that
interesting.
we like
So
to step in.
before we started recording, we were talking about how the fact that frankly, most of the chemical industry and certainly people are at big established companies don't actually understand how venture capital works, the role of venture capital. And I think certainly we see in the chemical space, when we think about green chemistry, there is a lot of startups, right, that are at varying sizes, varying degrees of success, some quite small with small valuations, some quite small with really big valuations. And I've had the opportunity to speak with, several different people, some of whom Capricorn invests in. So I think about James Gibson at Void Polymers
Yep,
and Keith at Econic Technologies. And I've also spoken with Gaurav Chakrabarti from Solugen, which is
yep.
arguably one of the biggest clean tech startups in chemicals today. But what's really the role? I mean, because you've obviously experienced this from the corporate side, and now you've experienced it from the small company side, and now you're experiencing it from the venture capital side in terms of going out and I guess identifying investments and figuring out where to put money. So tell us how that works.
Uh, how much time we have? So, no, it's interesting. There's no real blueprint. We follow a sequence on
Yeah,
scouting, scanning, selecting, etc. That's all pretty obvious. But the thing is really one of the key things now that you have is um, there's a lot of good presentations out there. But the key question for us is always, is this a good presentation with a bad idea?
yeah,
Or is this a bad presentation with a good idea? So the thing that we do in our funds, and like in the cleantech team, all the people in the cleantech team have a scientific, technical, engineering, business background. So before we make any serious attempt to look at the company, we look at, is it thermodynamically possible? And you may laugh about it, but we've seen proposals that from thermodynamics make no sense at all.
yeah.
And some of these actually get financed, okay? So don't get me going on direct air capture technologies, etc. But we can have a different discussion about that. But at the same time, you see there's a business need for these things, and therefore things get through.
Mm,
But what we try to do is really, we have a slogan where we say we invest, where technology impacts most. But then we have the second question, which is like, does it make sense?
mm,
Is it thermodynamically possible? Is it chemically possible? And then what you get, does it make sense? And the does it make sense question is business, but for instance, also complexity of manufacturing.
mm.
It's like you also have a chemistry background, so with 25 synthesis steps, you can make almost any molecule you want. But outside the pharmaceutical industry, probably doesn't make any sense at all.
Yeah, you can't actually
So
afford it at that point.
yeah, and then the other question is towards the market.
Right.
And, does it make sense for the customer to buy this or use this
Yeah.
product or technology?
Yeah. So
And
it's
and
in,
that's the most critical thing to look at. And anything else, the political correct answer is, of course, that I really like the team and blah blah blah. But if you have a bad idea, even with a good team, it's hard to make that work. In the chemicals world,
yeah.
if you get to software and SaaS, it's a different thing. But in the engineering chemical tech world, you cannot have a product that works 95%.
Mm.
I mean, still today, Microsoft Windows is not perfect. But
Tell me about it.
yeah, but the chemicals plant that's not perfect can explode.
Mm.
Or
Hmm.
or will or when you don't get your cost, over variable cost, it's a money sink.
Yeah.
And that's one thing I really learned in Shell. Like this cost focus is an enormous thing, and a lot of people underestimate that.
Yeah.
And so we want to have, does it make sense to do it? Does it make sense for the customer to buy it? And does it make sense to manufacture it?
Yeah. Makes
That's
sense.
the short
And
version.
yeah, I guess the question for me maybe is, and the question I think for a lot of people is like, why venture capital? Like, how does it work? And so you talk about going in and investing in a lot of Series A, which means in my very simple point of view, it tends to be companies that are the technology has been developed to a certain degree, and then it's ready to start moving into some degree of commercialization, small
Yeah.
scale, probably initially. But there's still so many unknowns. And I guess the question is, why do people go to venture capital to make this happen versus some other form of funding? How do you guys fit into the ecosystem of innovation, and business development?
Um, well, so a lot of corporates are good at evolutionary progress. Yeah. When they have a product, they can improve it. When they have a technology, they can improve it. But if they
Yeah,
want to try something new in a big corporate, there's hardly space. There's no room to do real new things.
yeah.
So startups are there to kind of promote that ecosystem. They are in this ecosystem supported by accelerators and hubs and whatever. And with these startups, you can work out ideas. It's trial and error. And so the startups, they need finance, and there's a lot of, say, governmental regional finance. But the say the chemistry-based world is quite um, not that many people that have the knowledge in that.
Yeah.
And if you look at life sciences, there it's a developed ecosystem of startups. And it's a very common model to go to venture capital for your research. And
Mm,
then large pharmaceutical companies, they are basically selling marketing and regulatory machines.
hmm,
So they need new molecules in their pipeline. They don't develop a lot of molecules themselves because it's
right.
very costly, high risk, takes a long time. But once there is a molecule, there's an acquisition model. In the pharmaceutical world, there's an existing acquisition model where you can invest in clinical trial phase one, phase two, phase three. There's certain valuations related to that in terms of the size of the market. In the chemicals industry, we don't have that yet. The
It seems
chemicals
like we're
industry,
going that direction, though, right? If I
well,
think about what's going on in
I hope so at one day.
biosurfactants, let's say,
Yeah.
right?
No,
Uh,
surfactants is a good example. That's where it
yeah.
starts to happening. Um, yeah, but so we get into the Series A as a specialized investor
Mm,
that helps co-investors to put money in it, like they have some trust in us,
got it.
because at
You
least
you
we
kind of
understand that.
provide the vetting process, I suppose.
Yeah, we can draw the molecule,
Yeah.
that helps,
Okay.
and yeah, and then we can estimate, like, we can kind of do an evaluation. Is this scalable or not, and how would you
Yeah.
do it, and how much risk is involved? And then kind of comfort the other investors, like, hey, this has a chance. This
Yeah.
is, yeah. And
You,
the role of venture capital is then really to take that, say, first 3 to 7 years in a company to bring it to a stage where you get either large scale demo,
right.
or you get to the real commercialization phase.
Okay. So you maybe answered my question, which is what's your investment horizon when you guys put money into a startup? How long do you plan to stay with that startup?
Well, most venture capital funds have a 10-year horizon, but they have +1 +1 or +2 +2 as extensions.
Okay.
And actually the 10 years is too short, really, for most. But the
Yeah.
way we balance that is by investing. We only do early stage investments at the early phase of a fund, and you do some later stage investments too. So you balance your portfolio between early and later stage. So that means that some companies you'll stay 3 to 5 years.
Right.
Other companies you stay 5 to 8, 10 years.
Got
That
it.
depends a
Got
bit.
it. Got it. Yeah, and your point about you maybe even need longer. I know like the Tech story, which Tech is, it's this great success story, right? It's gotten a lot of investment, it's getting a lot of success, et cetera. And for those that hadn't followed their story, they don't realize this is 20 years in the making. This was
Yeah.
not overnight success. This was not 5 years
No.
success. It was 20 years
Yeah.
to get to the
Well,
point of substantial commercialization.
our story is Eventia.
Yeah.
Capricorn invested early stage in Eventia, and we've been in we just sold our last portion of shares because we liquidated the fund.
Okay.
So we could not keep the shares, and otherwise
Got
we
it.
may have hang on. But I think we've been 16 years in Eventia.
No
You know,
kidding.
and yeah, but if you think about it, in that time frame, we've had the financial crisis,
Mm,
as one big. Then you had low oil, high oil prices, the whole development of wind, electricity, solar, and COVID. So the
yeah.
people at Avantium, Tom van Aken, really,
Yeah.
the persistence of these people is admirable. But hey, they're building the plant, and I think opening is scheduled October, November. So great.
Yeah. Yeah.
You know,
So Rob, as you mentioned that, I hadn't realized that you guys were part of Advantium as well. So I'm going to have to. So when people are listening to this or reading this, I'm going to end up linking all of the episodes of executives I've talked to that are somehow affiliated with Capricorn. So
okay,
I
great.
talked to Tom Van Aken of
Yeah,
Avantium. I've spoken with Corey Tyree of
yeah.
Trillium. I think you made that intro. James Gibson of Void Technologies. And then, of course,
Wiggins.
Keith Wiggins. There we go. Keith
Yeah,
Wiggins from Iconic Technologies. So there's a whole lot of clean tech energy investment that that I've managed to talk to and that will link to this that have a Capricorn connection.
yeah,
That's
definitely.
great.
Yeah.
So Rob, how do you contrast what you guys do from venture capital perspective versus private equity or versus some of the big venture capital? Because it sounds like you're coming in very early stage, relatively small investments when we think about just heck, let's be honest, the scale of what it costs to build and develop a chemical plant or chemical product, relatively small investments. But how do you contrast what you are doing versus what like a private equity firm might do or a bigger VC firm?
Okay. Yeah. So when we enter, we do a smaller ticket, but at that point in time, the valuation of the company is still on the lower side. So we get a decent share package.
Yeah,
And then when the company grows, we continue to invest.
yeah,
So we stay until there's a growth phase where we cannot no longer follow, and then we start to dilute. But by that time, you hope that the valuation has gone up sufficiently and that your dilution is compensated by valuation increase.
got it.
And of course, at some point, we need to sell it. And that's what I tell all the people you just mentioned, to James and Keith and others. Like, we invest to sell at some point.
Yeah,
So
yeah,
you have to agree to that. The difference between venture capital in the early phase is we get pretty actively involved in the board,
okay,
where we use our network. Uh, we can help the management team on, look at this, think about that. You need to make changes to people or to processes, procedures. We help the connection, not to strategic partners, to service partners,
mm,
but also syndicates to invest. When we look at a company in our first investment round, we also look at investability down the road. Are there co-investors that are interested in this space? And of
yeah,
course, are there potential exit parties interested in this space?
yeah.
But then our role is really in that syndication.
Got
And
it.
private equity and say late stage venture capital really comes into play when the technology risk is out and when the initial business risk is out.
Got it.
And they come in and they're really good at growth.
Mm,
When you then say, all right, we put in chunks of 50 million, 100 million, and we're going to make this work.
yeah.
But that's not our role.
Yeah.
We do that pre-work. And when it
Yeah.
comes to then the financial re-engineering and the growth finance, that's for,
Got it.
but we like to be at that beginning of that part.
Right. And so you're really in a lot of the de-risking
Yeah.
of de-risking and validation, I guess, of the technology, of the markets, of the investment to help
Yeah.
it
Yeah,
progress to the next
it,
step.
correct. Yeah, it's
Yeah.
de-risking of technology and business.
Yeah.
That's and in some startups you have to do it at the same time. You do it parallel, and then it's like, how do
Yeah.
you do that?
Yeah.
Because it's if you take, for instance, business development, you know, um, business development for an existing business is very different than business development for a new business. In business development for a new business, you really have to look at customers where do they understand that we're not completely finished? And
Mm,
do they accept that this is not perfect? And also when it doesn't work, is it not a failure to us in the market?
yeah.
It's like your first nil surfactant. You may not want to talk to Procter and Gamble, right?
Mm,
You may
yeah.
want to wait till you're a little bit more developed. And
Yeah.
also, rightfully so, for these kind of companies, they will only be interested if you have a pathway to large scale. They're not interested in a tiny little bit of something. If you want to sell to these type of customers, you have to be able to scale. If
Yeah.
you're in a niche market, you can work with different customers. So in the business development phase, early on, you have to think about that. You
Mm.
know, where do we have to prove? What do we have to prove? And how do you go about it? And then yeah, balance your risk profile on that.
All right. And I am calling a pause right here on the first half of my conversation with Rob. I hope you got a lot out of it. I know I really did. So much wisdom about the role of venture capital, how small, innovative companies really are critical for driving innovation and development in the future of chemicals and the role that venture capital plays. So stay tuned. Thank you for listening today. Next week, part two. You are not going to want to miss that. Rob dropped some great bombshells that are going to be hugely valuable to you. Thanks for listening today. We'll talk to you again soon.